Fed meeting. Let's go to Bob Pisani at the New York Stock Exchange. Bob.
Well, the good news is Europe closed near the highs. It was up about 1%, and we're not that far from the highs for the day. I think there's really only two big issues that are actually being debated down here, at least. The first one, of course, is this deposit insurance matter. That's front and center. Unfortunately, that isn't going to be resolved this week. So the other big issue, of course, is the Federal Reserve and what's going to happen there. And that's really an interesting question because everyone, Tyler, has essentially moved to the dovish side of this issue. So you're either in the camp that you're going to have a pause now, or you're in the camp that you're going to raise, hike, and a pause here. So what the market really wants is they want the Fed to prioritize the banking crisis instead of inflation. And the way to address that is to essentially have some kind of pause. What's very funny is to see that the more hawkish position has actually become what used to be more dovish position, and that is what we call the dovish hike here. So the Fed would raise once and then essentially imply that there is going to be a pause here. We saw that last week. That helped the belief that that might happen helped tech stocks. Bond yields were lower here. But that's, again, what's odd is that's slightly more hawkish position. A lot of people have moved to where Jan Hatzius is at overnight. Goldman, he said we expect the Fed, the FOMC, to pause at its March meeting this week because of stress in the banking system. So, Kelly, it's a big food fight over where the Fed's going to go, but it's amazing how much people have moved away from the idea of the Fed talking about combating inflation and more about addressing the banking crisis. At least that's what the market wants. So the big surprise is potentially if Powell essentially stays with the hawkish inflation rhetoric. Guys, back to you.
True. Bob, thank you.